Hi, I'm Philip Smith, financial planner with Tidepool Wealth Strategies, helping self-employed professionals and solopreneurs just like you cultivate resilience in your plans to retire well. This is the Financial Planning Podcast about money management, best practices for long-term growth, wealth-building truths and fallacies, successful retirement strategies, and more, where I'll be sharing concise, actionable retirement planning guidance. Welcome to the Financial Flow. Welcome to episode 11 of the Financial Flow. I'm your host, Philip, and today we're going to grab our coffee, tea, or whatever fuels your day, and we're jumping feet first into the tide pool of knowledge to get a quick 5 close-up on a crucial topic for every self-employed person out there: maximizing your retirement savings. That's right. We're running through 5 quick tax tips that will ultimately help you maximize your retirement savings, primarily crafted with the solopreneur in mind. And don't worry, it won't be all me today. I'll have the sometimes co-host AI chatbot in a feminine vocal flavor here to keep things artificially fresh. As fresh as something artificial can. Are we ready?
Absolutely, Philip. And just like I need updates to function my best, your listeners need solid financial tips to make the most out of their retirement savings.
Great. This is going to go really well. Let's jump right into this. Being self-employed can offer you great freedom and flexibility, but it also means you need to be more proactive about your financial future. We're going to explore 5 key tips to help you maximize your retirement savings. This could have just as easily been 5 tax tips. These tips will be oriented around taxes because ultimately, the money paid out to the tax man is money you aren't able to keep in your own pocket, keep in your business, or put away in your retirement account. Because I like to see people succeed at reaching retirement, the professed goal here is to be able to reduce the tax bill in order to maximize your retirement savings potential. First up, tip number 1. Let's tackle a basic understanding of tax requirements for the self-employed. My obligatory disclosure, please.
Philip Smith is a financial planner. He does not give tax or legal advice. Seek tax or legal advice from a tax or legal professional. You will hear this again. Trust me.
Thank you. Being self-employed means you're the boss, but it also means you have some unique tax responsibilities. And trust me, understanding these is the first step toward effective financial planning. Self-employed individuals typically file as sole proprietors, partnerships, S corporations, or LLCs. Each has its own rules. For example, if you're a sole proprietor, you'll report your income on Schedule C along with your Form 1040. If you're in a partnership, you'll need to file Form 1065 and provide K-1s to each partner. Understanding these requirements ensures you're not overpaying or underpaying your taxes, both of which can have serious consequences. And don't forget about the self-employment tax, which covers Social Security and Medicare. It's currently set at 15.3%. One or more of the business entity structures I mentioned can help you to reduce this particular tax bill. Working with a tax professional who emphasizes tax planning, not just tax filing, may cost a little more, but they'll likely make up for their cost in tax savings. Tip number 2, organizing your finances. Having your financial ducks in a row can make a huge difference.
Organization? I could write a book on it, in binary.
Yeah. Here's a quick strategy. Create a separate checking account for your business, set up an online accounting system, and keep detailed records of all your business expenses. I'd also recommend using one credit card solely for business. Keep the ledgers clean and separate when it comes to things you intend to include in your list of business deductions. Not only will this help you at tax time, but it will also give you a clear picture of your financial health.
Just think. With all that money you save, you might finally afford that ergonomic office chair you've been eyeing.
By separating your personal and business expenses, you can easily track your income and deductions. Tools like QuickBooks Self-Employed or FreshBooks can help you stay organized and provide helpful insights into your financial performance. Remember, good records are not only necessary for taxes, but are also crucial for monitoring the health of your business. Tip 3, claiming those business expenses. This is where you can really save big. Every dollar you spend on your business could potentially reduce your taxable income. Keep track of every business expense, from office supplies to travel costs. If you work from home, you may be able to deduct a portion of your home expenses like rent, utilities, and even maintenance based on the percentage of your home used for business. Work closely with a tax pro who is familiar on what is appropriate to deduct and what is just a frivolous TikTok topic that gets eyeballs. Make sure to document everything and keep receipts. The IRS is strict about what counts as a deductible expense, so it's important to be thorough. Don't forget about vehicle expenses if you use your car for business purposes. Track your mileage and keep a log. Again, consult with a tax pro on what the best deduction method is for your vehicle in your particular situation. Tip 4. Using tax software. These tools can simplify your life and help you catch deductions you might miss. Tax software is good for those who keep great records and have a relatively simple tax situation.
Wowie wow. If only I could download tax software directly into my circuits.
Programs like QuickBooks, TurboTax, or H&R Block can help you keep track of your expenses, estimate your taxes, and ensure you don't miss any deductions. Many of these tools also offer features like automatic expense categorization or receipt capture and tax deadline reminders. Using tax software can save you time and reduce the risk of errors. Plus, many programs offer support from tax professionals if you have questions or need assistance with more complex issues. However, I strongly recommend that if you go this route, you keep in mind that it does require more work on your part. Saving money by not directly hiring a tax professional will cost you time. That's the trade-off. And I'd still recommend having a tax pro do your taxes every few years to ensure you're filing correctly and not missing deductions that the software didn't happen to catch. Finally, tip number 5, taking advantage of tax breaks for home-based businesses. This can be a blessing for self-employed folks.
With all the tax breaks you find, maybe you'll name your home office the tax haven. Probably not.
If you run your business from home, you can potentially take advantage of several tax breaks. I say this with caution. You really should work with a tax professional to determine which tax deductions are legitimate for your situation and which might raise a red flag with the IRS. Anyhow, the home office deduction allows you to deduct a portion of your mortgage or rent, utilities, and other home-related expenses based on the percentage of your home used for business. You can also claim deductions for business use of your vehicle, internet, and phone expenses. Oh, and also office supplies. Make sure to keep detailed records and receipts for all these expenses. And when taking the home office deduction, this is a very serious matter. Don't use the home office for anything other than work. If you maintain it as a work-only space, then you avoid any gray areas that could result in legal issues for you down the road. Consult with a tax professional to ensure you're maximizing your deductions and staying compliant with IRS regulations. And the thing I didn't even touch on in this episode, as you direct these saved tax dollars into your retirement account, you have the ability to realize additional tax savings, potentially as the retirement plan participant if you're making pre-tax contributions, or as the business owner when making employer contributions, or maybe even on both fronts. All right, so let's recap those 5 quick tips. Understand your tax requirements, organize your finances, claim your business expenses, use tax software carefully if you have a relatively simple situation, and I'd recommend still checking with the tax pro from time to time. Take advantage of home-based business tax breaks. By following these strategies, you may be able to efficiently reduce your tax bill, which will in turn significantly boost your ability to add more to your retirement and help you to continue on a path toward a more secure and comfortable future. Remember, the key is to stay organized, be proactive, and leverage every tax break that is available to you.
Planning for retirement is smart. It's essential. It's the intelligent thing to do.
So let's take some action on this. 2 quick action items for you today. Get organized and check in with a CPA or tax professional who offers tax planning guidance. When I say get organized, I mean have a system for keeping track of tax-related documents and ensure that system includes diligently keeping business and personal finances separate. When you check in with a tax pro, remember, a good tax pro will tell you whether or not you actually need to work with them or if you'll be just as well off handling things with tax software. So that was sort of 5 tax tips under the guise of maximize your retirement savings. But the reality is that when you're self-employed, it's all tied together. Thanks for tuning into this episode of The Financial Flow, brought to you by Tidepool Wealth Strategies. Until next time, stay resilient and plan to retire well. It's disclosure time. This podcast is intended for educational purposes only, should not be used for any other purpose. The views depicted in this material should not be considered specific advice or recommendations for any individual, are not intended to be financial, tax, or legal advice, and do not represent Tidepool Wealth Strategies or Cetera Advisor Networks, LLC. For a comprehensive review of your personal situation, always consult with a financial, tax, or legal advisor. Neither Cetera nor any of its representatives may give legal or tax advice. Our office address is 450 Country Club Road, Suite 350, Eugene, Oregon 97401. Securities and advisory services are offered through Cetera Advisor Networks, LLC, a broker-dealer, registered investment advisor, and member of FINRA and SIPC. Cetera is under separate ownership for any other named entity. Whew.